Regular Insight viewers recognize her right away as a valuable resource in planning and sustaining your retirement. She's Heather Foster, investment advisor and fiduciary. Today we want to talk about the dreaded taxes.
Tax season.
It happens every year.
Is upon us.
Yeah.
Once again. So I like to put out some reminders before people start really diving into getting their taxes done, because we're starting to gear up. We have, clients starting to come in. Everyone's getting their 1099s and their W-2s. A couple things to remember about the things that we talk about on this show when I'm here: Roth conversions, and when we send charitable contributions from our IRAs directly, which are qualified charitable distributions. Those things don't show up the way that you might think. So when you get your 1099s and you hand those 1099s to your CPA, they don't know whether that was just a distribution or how it's coded. So the custodians don't code things like a Roth conversion and qualified charitable distributions as what they actually are, okay? So there's nothing on the 1099 that says, hey, wait a minute, this shouldn't be taxable as far as the charitable donation. So you actually have to show them some sort of documentation that you actually sent money out of your IRA directly to a charitable organization. So you're the one that has that burden of proof, and CPAs won't know that you did that. And a lot of people don't get, if they don't get the receipts from the charities, they'll code them as a normal contribution to a charity, which most people cannot itemize. So if you're in a situation, and I see this all the time, and we tell people, hey, you need to amend your taxes, you didn't actually get that donation tax-free because they didn't tell their CPA, hey, I made this donation to this non-for-profit and it came from my IRA directly. That has to get coded differently. But it doesn't show up on the 1099, which always confuses everybody. They're like, well, why don't the custodians code this as not taxable if it's not taxable? It's not their, they look at it like it's not our burden to prove that you gave this to a charity, that the charity cashed that check. So you have to have a receipt from the non-for-profit organization, and you have to tell your CPA and remember to tell them, hey, I didn't write a check for this. The check came directly from my IRA, which means that it's not taxable as far as income to you. That's the first thing. The second thing is the Roth conversions. It's kind of similar. 1099 just shows it as a withdrawal. It makes it look like you took money out of your IRA and just spent it. And instead, it was converted to a Roth. So while a Roth conversion is taxable, it still has to get coded on your 1040 a certain way so that the IRS can track that you converted IRA money to a Roth account. There's a 5-year rule on the growth of those Roth accounts to be able to take the withdrawals out tax-free. So you have to code it in the system. Hey, I did a $20,000 Roth conversion. It gets put on a special form. Most people will get something called a 5498 tax form in May. That is for rollovers if you rolled an account from one to another, again, showing it's not taxable. That 5498 a lot of times will also show it was done as a Roth conversion, but since those don't come out until May, it's after the fact. So you have the burden to tell your CPA, because most CPAs, if you forget to tell them this stuff, they're still going to charge you to amend your tax return. Whoops, I forgot to tell you. It's not an error on their side.
It's on yours.
It's something that I wish that more CPAs would probably ask the clientele, hey, did you do any Roth conversions this year? Did you send any money to a non-for-profit directly from your IRA? But we see this missed quite a bit. So those are a few things. And then, of course, prepare for contributions. You can still put contributions in up to the tax deadline of April 15th for IRAs, Roth IRAs, HSAs, things along those lines. So there's still things you can do from a planning perspective up until the tax deadline to try to maybe offset taxes or get some additional money saved. Those are always really important. But the big one I wanted to remind people of, we see this missed all the time. If you sent money from an IRA to a charity, make sure it's coded correctly. If you did a Roth conversion last year, make sure that is also coded correctly as well.
Well, you have to remember that they are working 20 hours a day right now, and they're just trying to churn things out.
And legislation's always changing too. So I know from the CPAs that we work with, they're like, this is a chaotic year. This is going to be very abnormal, and they're not extending right now any sort of deadline, so it's going to be kind of chaotic. We also had the COVID withdrawal last year.
Where you didn't take taxes.
Yeah, you could take out $100,000, so that's some additional way that they haven't really laid out exactly how all this is going to work. I mean, we know that you can spread the tax liability over 3 years or put the money back. So there's some special rules this year. So if you're someone that did that, make sure you get into a CPA early. Don't wait to the last minute this year.
Just when we thought things would get easier. If you need somebody to help you out, all you have to do is call Foster Financial. They would be glad to give you a second set of eyes or a consultation. 234-2200. We'll be right back.